Welcome back. In this video, I'm going over how to calculate reasonable compensation and of course, what exactly reasonable compensation is for my S-Corp business owners. If you're new here, my name's Amanda and you're watching The Business Finance Coach, where I simplify all the technicalities of business to help you succeed because I believe that the world needs your business. And I'm a business coach who helps you manifest your deepest, truest vision for your business. Together, as we rise, I believe that we can actually create an environmentally and socially responsible world. I have a free business spreadsheet template as well as a complete solution for setting up your business right, accounting and taxes for small business owners and for accounting and tax professionals. So check out the description below for more information. Now let's jump into what is reasonable compensation and how do you calculate the right amount of reasonable compensation for your business and your situation. So what is reasonable compensation? Reasonable compensation is for S-Corp small business owners. They have to be paid as a W-2 employee. And there can be a tax benefit for using the S-Corp because the net income from the business isn't taxed for Social Security and Medicare taxes. But because there's that opportunity to not pay those taxes, the government, IRS, wants to make sure that owners pay themselves a fair wage. Now, this is not straightforward. Anyone who tells you, 40% of your net income or $20,000, they don't know what they're talking about. You cannot calculate reasonable compensation in that way. And I'll be showing you a reasonable compensation calculator to walk you through how you actually calculate this amount. So because there is this opportunity for tax benefit, we have very specific rules around calculating the amount of reasonable compensation that a business owner needs to be paid. Now, when we talk about employees that you might hire that are unrelated to the business, they aren't an owner, we don't have to deal with reasonable compensation because those people won't work for us unless what we're paying them is reasonable, right? If they can get a higher wage somewhere else, that's going to push up the standard wage for that type of job in whatever your location is. So it's the same concept with reasonable compensation, is that because you're a business owner, we have to figure out, well, what would you be paid if you hired someone to replace you, which is going to be based on a lot of factors. And there's going to be a range that amount could be. And so this summarizes the information that I'm giving you and goes through a bunch of criteria to consider when determining reasonable compensation. Basically, if the IRS challenges your reasonable compensation, then you could agree with the amount or you could dispute it and go to tax court with the IRS. And because of people doing that, we have various court cases that show us how the court deals with applying the tax rules to this concept of reasonable compensation. And so based on those court cases and the guidance from the IRS, I've created this reasonable compensation calculator. Now, the key with this calculator and with any amount of reasonable compensation that you come up with for yourself is that you must document this. And documentation is so important. Documentation includes looking up what a salary would be for someone to do bookkeeping in your area, or, looking on pay.com and coming up with various ranges that people would be paid or salaries, printing that type of documentation and keeping it for your records to support your amount of reasonable compensation. That goes a long way. So does actually writing a written narrative that justifies that amount. And so that's what I'm going to walk you through in my calculator. So there are two different methods for calculating reasonable compensation that I've created in this calculator. The first one is for those of you who are really doing all the work in your business or a substantial portion of work in your business versus those of you who are managing a business and primarily delegating all of the actual work that's being done. So with method 1, what you're basically going to do here is put in the average amount of time you spend per week, and then based on that average, you want to list out all the various tasks that you perform and allocate a percentage of your time to those tasks and then an hourly rate to those tasks. And that's going to go ahead and calculate you a salary. Now, if for some reason using salaries makes more sense, you can do that. Salary versus hourly wage, it doesn't matter. But this can allow you to come up with the lowest rate because maybe you're doing a lot of tasks that you could pay someone minimum wage to do, or, certainly a lower rate to perform than a business owner. On the other hand, with the second method, the difference here is that because you're managing an actual business, we want to really detail out the size of that business, how many employees or contractors, how much sales does the business have, what's the type of business in the industry, and what type of skills and experience would you look for if you were replacing yourself. And then to basically find 3 different job positions with salary amounts or ranges or averages that are provided under different places like Glassdoor. Find 3 different salaries and average them here. That's what this does, is give you an average for those. Now, you might apply those different salaries to different aspects of your job and say this one is 50%, this one's 25%, or just come up with 3 that you think would be, related to your type of business and get an average. Now, like I said, the next thing you want to do, you don't want to stop there, is you want to really detail and explain, justify why that amount is appropriate for your business. And then you can see my next worksheet here is a checklist to test your reasonable compensation. And so if you're doing this on your own without this worksheet here, then you could just write out the answers to these questions to continue documenting the narrative for your reasonable compensation amount. So the first question is to look at, were any of the salaries and wages you documented, were they for a similar business based on a similar location or online as applicable? If not, do you think you need to increase or decrease your amount when you accommodate for those things? So for example, if you're in New York City and the salaries you got weren't for New York City, then do you need to increase the amount a little bit? Or if you're in a rural area and the salaries and wages you got were not for a rural area specifically, then should you adjust them? Or maybe they were for your exact location and you don't need to make any adjustment. Just take note of that. Next is to consider payments to non-business owners. So if the company has employees or contractors, looking at what was the highest amount they were paid in comparison to this salary you're paying yourself. Compensation agreements. So does your business have an operating agreement and formation documents, amendments to the operating agreement? Does it say anywhere what amount you're supposed to be paid? This could especially apply if you purchased a business, was someone historically paid a certain amount in that position? And of course, whatever amount you do decide on, you want to properly document by an amendment to the operating agreement and establish a policy. Next, you want to consider timing and manner of paying bonuses to key people in the business. If you have other people in the business, looking at bonuses that are paid to contractors or employees, when and why are they paid, and then compare that to your own payments. Lastly, here we have a few different calculations to look at. So if you consider the total amount of dividends you've received if you're a corporation, or distributions if you're in an LLC, that's the amount of money you took out of the business after whatever you're estimating your reasonable compensation to be. So enter that amount here, and then this table is just looking at some comparisons. If you look at the total amount of reasonable compensation as a percentage of gross sales versus net income, versus looking at your pay as a percent of net income, total sales, and same with your dividends or distributions. Again, this isn't what you want to use to base your decision for the amount of reasonable compensation, but it's worth looking at, as most people, I mentioned down here, salaries there are statistics around this based on 40-60%. And the 40-60 rule is something that I found a lot when I Googled. This is not a rule. Like, you should not use that rule to base your amount of reasonable compensation based on 40-60%. It's really based on this criteria first, and then you can certainly consider that averages are between 40 and 60%. Other things you might want to consider is if there are pension or profit sharing programs, the size and complexity of the business. The independent investor test allows you to look at your distributions or dividends, if you're a corporation, as a return on any capital you initially invested in the business. Now, often with my smaller businesses, we didn't invest any capital, right? It was sweat capital. You might have spent a lot of money that's contributions, and so you could look at the distributions you've taken as a percentage return on your investment. And if that amount is average for the industry, then that's certainly a positive thing. You know, if it was far greater than the average for the industry, that's just something to be aware of, as some court cases have considered this type of data. So in conclusion, it's really about having a holistic approach to calculating your reasonable compensation and documenting it. You want to be sure to get some salaries and hourly wages offline and print those out or out of a newspaper, wherever you can find them, and keep that as documentation, because that's the most important part if you're ever challenged based on your reasonable compensation. Now, you do want reasonable compensation to be as low as possible, because that does have the potential to save you more taxes the lower it is. But if you put that amount too low, you certainly are opening yourselves up to an audit for having reasonable compensation too low. Lastly, if you're wondering if the S Corp is right for you and really is going to save you taxes, you can check out my business types comparison spreadsheet template, which allows you to put in your business income and expenses, as well as your reasonable compensation for salary, and then compare the total tax situation at the end to make sure that you're in the best situation. The S Corp does not save everyone taxes, because on those W-2 wages, you're going to lose the 20% income deduction, the QBID deduction that we now have for the next few years. So that really is something to consider before jumping to the S Corp. Check out other videos I have going over that spreadsheet for more information. That's all for reasonable compensation. Did you calculate your amount of reasonable compensation? I'd love to hear from you in the comments below this video. If you still have questions on reasonable compensation, do ask and let me know. If you want to get a hold of the worksheet or the business spreadsheet template I told you about at the beginning, again, check out the description. And if you're new here or you just want to support me, consider subscribing. Check out any other videos around here that you might be interested in, and I hope to see you next time. Bye.